Now I have this little mini quiz at the end of this chapter. So make sure you pause, go through all the questions, and then come back. I'm about to start discussing the answers. So question 1. An auditor selects a sample from the file of shipping documents to determine whether invoices were prepared. This test is performed to assess the assertion of blank with respect to sales transaction. Hopefully you recall us talking about this control earlier when we were talking through all our controls. And you got E, completeness, which was the answer. But basically, to think through this, what you're doing is you're picking a sample from shipping documents and you are tracing it back into invoices. Now, remember, invoices, in this case, we talked about the fact that invoices represent records because they represent a sale being recorded. So since I'm going from the shipping docs to invoices, aka the sale being recorded, so similar to me going kind of from a source document, right? Because source document, shipping doc, that represents the sale existing, right? Because that's me actually fulfilling my performance obligation. And I'm going back to the invoice to see where it was recorded. So this is completeness. Okay, 2A and 2B are obviously just a flip-flop of one another, which I'm sure you saw when you were going through. Which of the following control activities may prevent the failure to bill customers for some shipments? So most of you, I'm sure, immediately got rid of B and C because you're like, okay, I know I need some kind of control that compares billings, aka invoices, to shipments, aka shipping docs. So I need billings, shipments. And A does that and D does that. B and C don't do that. So I can eliminate them pretty quickly. Now, the main thing you're left with figuring out here is what is going on directionally with A versus D. And A is saying the shipment will be supported by a pre-numbered sales invoice. And A in this case is actually our correct answer here. So the shipment being supported by a sales invoice will make sure that I don't fail to bill customers for a shipment, because by the time I am shipping something, I already know, hey, this is the invoice. I have the invoice ready. This is the invoice that I'm gonna send out. I have that ready as I am shipping, right? D, each sales invoice should be supported by a shipping doc. That will ensure that I don't bill somebody for something that I have not shipped. You can see why I kind of had to create question 2B, which flip-flop this. Question 2B says, which of the following control activities may prevent billing customers for a shipment that has not yet occurred? All right, so I want to make sure that I don't charge you for something I haven't shipped yet, then clearly when I'm getting ready to charge you, I want to make sure I have a shipping document. Right. So this one is, it's much easier for people to kind of get behind logically. So people are like, oh, okay, so for each sales invoice, when I'm getting ready to bill you, I should have a shipping document to support that. So I'm not trying to bill you for something I haven't shipped. So this makes more sense than the reverse. And I think it's just because the reverse situation in 2A is just kind of a backwards way of thinking about it. But A isn't necessarily saying that the person has been billed before you've shipped it. It just means associated with the shipment before you ship it, you have the pre-numbered invoice ready to go, right? So that I can basically almost do both procedures, the shipping and the billing simultaneously. And then if I move forward and I tried to invoice something else, I would later look and I'd see I missed an invoice because it's a pre-numbered system, right? If I looked at an invoice listing, it would be obvious that I skipped one because it's pre-numbered. Okay, so 2B is D, 2A is A. Okay, question 3A and 3B were very easy. So 3A was a positive confirmation, requests that customers respond whether they do or do not agree with the amount owed. This was a clear true. This was very straightforward. If you didn't get this, go back to that slide on positive versus negative confirms. Given your answer for 3A, which type of confirmation is widely considered better, positive? Again, if you don't feel like you have any idea for this answer, go back to that slide on positive versus negative. And question 4, which of these audit procedures would be the best test to ensure the entity has legal title to AR, aka which of these procedures would be used to test R&O? So hopefully you went through these. And A, review AR aging. So this tests valuation, selecting a sample of shipping docs a few days before and after year end. This is revenue cutoff. C, reviewing the drafts of the financial statements. That's going to be probably testing some kind of presentation and disclosure. And reviewing AR confirmations. We know this is AR existence. So last but not least, E, review of corporate minutes or examining cash receipts. Yes, and we said the other procedure that can work here too is technically inquiry, even though we know inquiry is not the most reliable, can also count here too. So yes, we said these are all things that we can use for tests of R&O. Right? And if you feel like you struggled with that one, go back to this slide and review it.